Okay, I think I'm live. I'm gonna wait a little bit and get myself prepared. So if anyone's here, let me know. I think I might have one person. Maybe that's me though. We'll see in a minute. Hey Kelly, thank you for joining. I appreciate you. So I'm gonna kind of wait a little bit. Hopefully, some other people come in, and we'll see what happens. Hey, right? Um, I think I'm better prepared today. I just have to make sure that I'm getting the technology. Hello. Hey, I want to make sure I have trouble with this. I want to think about it for a minute. Sibongile, correct? Because or is it Sibongile? Can you can you tell me how to say it or type it in a way that I can make sure I got it? Hey, Stephanie, how are you? Thank you guys for joining. I appreciate you. Um, I said it right, Sabongale. Now, see if I'm right. Tell me if I'm right on that now. Sabongale. I should stop looking down. I'm looking at the comments. I should be looking here. So I'm kind of waiting on. Hopefully, some other people will join us. If not, that's fine. Sibongale. Got it. Thank you very much. I appreciate it. I always get a little nervous when I'm about to say it. And by the way, I'm probably gonna tell. I'm not gonna tell all your business, but I'm gonna tell a little bit of your business today. No, I won't do that. You tell your own business. I just love what you're doing. That's all. What do I got? I got me 6 people here. Maybe that's including me. I don't care. Listen. So I'm just kind of waiting a little bit to see if some others will jump in here. Um, it doesn't matter. If they see it now, that's great. If they see it later on, that's great too. All right, Stephanie. Thank you. And by the way, I have some coaches in here helping me out. So I appreciate them being here and helping me out where they can. Okay. All right. Hey, Tracy. Thank you. I appreciate you jumping in here. So listen, I am going to, this is my second live, but this is my first one doing it seriously. So give me a little grace here. I'm gonna give myself grace, and we're gonna see what becomes of it. All right. So I'm Dee. I am my YouTube channel is Brown Girls Invest Too. I try and help Black and Brown women invest, increase their financial literacy, and I also tell a little bit of the story of how I moved to Mexico, and I'm on a 1 year sabbatical, and just kind of finding out what life is like in another country. And I'm having a great time so far. Having a great time losing weight. My health is better. All those things. So I wanted to talk to you guys about 401ks because I've been talking with folks, and it seems like there's a little more education that may be needed. So I'm just trying to give a little bit of help to them if I can. The conversations I've had range from sabbatical or relocation. We don't know yet. Now, do we? But probably relocation. I don't think I'm going. I better not say that. Probably relocation. We shall see, though, right? Um, I am. I'm very serious about helping other folks that look like me get to a place where they can either have a sabbatical or relocate or retire well, because there is a huge wealth gap and we've got to find ways to be able to close it. If you have a 401k, this is one way to do it. I don't know. Do I need to advance this? And by the way, I got some coaches in here that are helping me. I'm sorry, Kelly is here. Stephanie, Tracy, thank you for jumping in here. Who else is here? Sibon. Oh, hey, Evelyn, how are you? Thank you for coming. I appreciate it. I got me a friendly audience. I appreciate this. So anyway, I want people to be able to retire well, and to be able to do that, you've got to get your money right. One of the ways to do that is through your uh, company provided 401k. Now, I know everyone does not have one, but for those that do, the things that we'll talk about today will help you. For those that don't, in the future, I am actually going to put out some things maybe for a Roth IRA or a traditional IRA, whatever tools I think that are helpful for folks to help them get their money in order. That's what I'm going to present to you. So, in talking with folks, I found out that people do not even know how to look at their 401k. And by the way, I'm hot, so look, I have my fan on. I want to make sure, is that fan too loud for you guys? Because if it is, I will turn it off. Can you let me know that, please? Absolutely. Yes, all of the principles from a 401k can be applied to a Roth IRA as well. You can hear the fan. Thank you, Kelly, for letting me know that. So, some of the things I'm finding is, one, people don't know how to get into their 401k. They don't know the password. They haven't looked at it in years. The biggest thing, they don't know what's in it, right? And they don't know how it's performing. You have got to know that. The reason you need to know that is you don't want to work a 30-year career at one company or different companies and then find out when you're close to retirement that you don't have enough money. So all of the things you, I'm sorry, I'm going to cover stuff, but I need to be checking comments as well. So let me just make sure I'm not missing something that I should probably speak to. Hey, everybody. I like that. Yes, government workers often have access to 457B plans or the 403B. Now, 401k plans are for private and public companies, but 403Bs are usually for non-for-profit. I think, where do teachers fall? I think they fall under 403Bs because they are less regulated by the government. And unfortunately, a lot of insurance products end up in them. That's a different story. We'll talk about that another day. Hey, She Signs, how are you? Somebody just asked me if I was on sabbatical or if I was relocating. I'm not sure. Maybe you may know that answer. Anyway, thank you for joining. And thank you, Kate. Thank you, Kelly, for having people do that. Can you guys please hit the like, share, and subscribe button? Again, this is all new to me. I was going to save this stuff later. I'm going to get to the business of the 401k, right? And so again, I said this is covering 401k, but later I actually will bring other information out for people that are in those different programs, like a 457B, a 403B, those things. Now, let's see. I should let you know I am retired. I retired. It'll be 5 years in January, right? So I was able to. I need to stop looking at this. I retired 5 years ago. I'm sorry, 5 years ago in January, because I was able to do some right things with my money. But I didn't have the people in place to teach me how to do those things. I am actually self-taught. But I'll tell you how I actually got into the 401k to begin with. I worked for AT&T for 30 years and 16 days. I started out as a 411 operator, and they started me out with very low money. I made $222 a week. And I remember one day, and by the way, I'm sorry, when I got into the 401k, I was 19 years old. And I was a 411 operator, and I remember the union steward came over to me. She laid a card down, a little index card, and said, "Sign that." And I was like, "What is it?" She said, "Sign it." I said, "What is it?" "Sign it." Oh, so I signed it. She grabbed it and said, "You're in the 401k," and walked away. I'm like, "What? I don't want to be in the 401k. I don't make enough money to contribute to it." But that is one of the best things that could have ever happened for me. I lost my father when I was young. And my mother did not work a job that provided her with a 401k, nor did she really have her savings right. She did everything she could to take care of my sister and I, but that just was not the education she had. She could, hey, Felicia, how are you? Thank you. I'm getting all my partners coming through now. That ain't my partner. That's my that's my extra mama, right? But anyway, so I forget where I was now. I think I was talking about oh yes, starting out, my mom she did not work steady jobs, and she didn't work jobs that would provide her with a 401k. So I didn't have the people around me to tell me to save this way, to do this, that, and the third, right? But she did the best she could with the money she had. She made sure both of her daughters were educated enough to do the things they needed to do to take care of themselves and eventually to take care of her. Now, putting that to the side, I am now in the 401k at age 19, right? Again, it wasn't a lot of money. I never was a high income earner at all, but that was not a lot of money to start. But when the small payments that were coming out, small contributions that were coming out going into my 401k, I complained about it to begin with, but in the end, a couple months later, I said, wait a minute, this thing is growing. Okay, cool. Keep going. A few months later, look at it again, it's still growing. Well, now I'm intrigued by it, right? Now I'm interested in why is it growing like that. So when I look into what it is, what's within it, and why it's growing, now I want to know more. So that's how I started to grow my own knowledge base about how I could grow my money, how I could better my life and better my family's life. And I did it from starting with the 401k. All right. So now that to the side. What is a 401k? A 401k is an employer sponsored plan, that employer sponsored savings plan that allows you to take money out of your paychecks prior to you even receiving your check, right? It is using pre-tax dollars. Thank you. It's using pre-tax dollars to put aside for you to save for your retirement. Now, I was in a weird time frame of workers, right? And so if you remember your parents, your grandparents, they had a pension, right? There's not many pensions that exist now, but I was fortunate enough. Thank you. Thank you very much. I was fortunate enough to have a pension as well as have a 401k, right? And so I was at the intersection of a workforce that were able to do that. A pension was when a company, they took the responsibility of putting money to the side for your retirement, right? When you retire, you get a gold watch, a new TV, and kiss. Thank you for working for us, right? A 401k requires you to do the saving for your own retirement. They put the onus on you. Now, companies did not, they didn't do this on purpose. It was actually started, I think, in 1978 from a tax law, right? They started to take advantage of it, I believe, in 1981. In 1981, then companies like, hey, one of my favorites, Johnson & Johnson, two of my favorites actually, Johnson & Johnson, Pepsi, a company called Hughes. Hey, I got that awkward black nomad here. Listen, for you guys that don't know, I have an accountability group, and some of my team members are here with me, and I appreciate them being here with me. I want to tell you about a few of them. So I'm going to come back to the 401k, but this Kayleana, that ain't Kayleana. Not to me, she's not. She's Kelly, right? Kelly has Kelly questions. Kelly also, Kelly does, she's a real estate agent, right? She's in Tampa. She's got two channels. One is Kelly Knows Tampa, and the other is Kelly Questions, right? Go check her out. She's got great information on there. Let me tell you about who else is here. So I've got Sustainable Steph. Now, Sustainable Steph is killer, right? She is a retired teacher. Her channel is, oh God, it doesn't matter. Click Sustainable Steph and it'll go to her channel because I think that's the actual name of it, right? She is teaching people actually stuff about how to retire, right? She's got things on there about how to take care of yourself by eating better. I'm not sure if I got my cousins here too. I got my family popping in, y'all. I love that. All right. So anyway, check out sustainable stuff. I want you to check out the awkward black nomad. Who else we got in here? Oh my God, where's Tracy? Go check out Tracy. Tracy Collins. She's got I think 2 channels. Tracy's killer. She used to catch babies. Now she teaches people how to catch babies, and she teaches Black women how to build their businesses. Right. Let me see who else I got here. And this person does not have a YouTube channel, but Simone Delay actually is one of my steadies, and she has been going through all of her finances and checking off things where she can save money, grow money, and all these things, right? She's going through all of the steps and has made great gains in moving herself toward financial freedom. So thank you guys all for joining. I appreciate it. I hope I'm not leaving anybody out. I think I got 2 other, I don't know if my 2 other team members are here, but one is, goodness gracious, Black, Flourishing and Free, Zolani. Zolani is a psychoanalyst as well as she gets you rested, y'all. Go check her channel out. And then we've got, Kelly, help me 1 second. Wait a minute. I think I got it. 1 minute, 1 minute. Her Soul Fit. Check Jennifer out. Jennifer teaches women that are premenopausal how to lose weight by still eating sweets. All right. Check all of them out. I appreciate you guys for being here. Now, thank you guys for giving that to me. Now I forget where I was, so now you don't have to tell me where I was. I think I got it. So now they put the onus on you to save for your own retirement. Love you back. I really do. They put the onus on you. Thank you. Oh, and then thank you for the Johnson & Johnson she signs. Oh, she signs. Now, she doesn't have a channel, but if anybody needs a sign language interpreter, that's who you need right there. And thank you, Tracy, for telling them to do that. Let me get to this material and stop looking at this, all right, for a minute. I'll check back to it in a minute. So they put the onus on you to do your own saving for your retirement. So in 1981, Johnson & Johnson, Hughes, Pepsi, and there was another company that took advantage of it and started people with their 401ks. That's how it all began. Now, if you are lucky enough to have one, and pardon me, I'm going to be looking here because I've got my notes here as well. And there. I got notes everywhere. Cover that. The purpose of it, again, is for you to put money aside that is tax-free, right? So the idea is that you will be in a lower tax rate when you get to be older, and hopefully you'll be paying less taxes on the money that you've saved, right? Because they are not going to save for you that way, I think you guys really need to take advantage of this. Now, some companies will match your contributions. And when I say that, I used to work for AT&T, and they matched my contributions at 80%. There's some companies that will do 50%, 80%, and that's my cousin right there, Just Nora. She ain't Just Nora. She used to make me good food when I was a kid. She still do it. I go get on her nerves in Mississippi. Anyway, so companies will match it at 50%, 80%, and 100%. If you are one of those folks where they are matching you at 100%, take that money, right? Some people will not get into 401k. I don't know why they don't do it, but you're leaving money on the table. It's part of your compensation package, right? What it basically means for my company, if I put down $100, my company put down $80. Right? That's an 80% gain right there off the rip. I haven't done anything. That hasn't even been invested yet. So once that $180 is invested, now it's a bigger chance for it to grow. But again, If they're giving you 50%, you just got a 50% gain. They're giving you 80, you got an 80%. If they're giving you 100, you just got a 100% gain. Now, if you don't know, the stock market generally, on average, the stock market, y'all can't have none of that grub. That belonged to me. Okay, I'll share. I'm nice. Anyway, so if you, oh boy, okay, I gotta stop because I'm match up to 5 to 6. I'm gonna get to that, but thank you. So the money that you're putting in there, your company will generally match. It's usually up to 6%, but Savongale says it could be 5. So apparently she knows that there's companies that will only match up to 5% of your salary, right? So now, if there's a chance that you can put money up to 6%, I say up to 6%, 5 to 6% of your salary, put that away, and then your company is going to match a portion of that, get that money, right? Because later on, you don't want to be in a situation where, at least I never wanted to be in a situation where somebody could come tap me on my shoulder and say, we don't need you next week, right? You go up there right now, you go work for 2 weeks. You ask them, what do you need me to do? They tell you do this, that, and the third. You do that, they pay you, right? You've been doing that for a few years. Well, you see things are being automated now. A lot of companies are moving to automation. The automation that they're doing, they don't need as many workers, right? So you don't want to be in a situation where they say, we appreciate you, we appreciated you, but we don't need your services anymore. And you don't have anything saved for yourself, right? Whether you've done a full career with them or whether it's just only been a few years, all right? So I'm big on saving, I'm big on investing, and I always will be, because I don't ever want to be in a situation where I can't take care of myself or I can't take care of my family. Now, there are contribution limits. Now, the government allowed you to save $22,500, right? And then, by the way, I need to cover some changes that are upcoming. Earlier this year in January, one thing changed where people that are over the age of 50 are allowed to put in catch-up funds. So they now let you put in an additional $7,500 in catch-up funds, but that's only for people that are over 50 years old. There's a lot of folks that I hear that either haven't started saving, haven't saved enough, or just find themselves in a position where they don't seem to have enough at the age that they are if they are close to retirement. Catch-up funds is a way for you to be able to save a little more. One second, let me. Yeah. You too young. Too young for what? All right. So, and again, I see I covered some stuff that I should have covered down here, but anyway. So now, again, we know what a 401k is. We know that companies will do matching. We know how much pre-tax contributions can be. That's the $22,500. Reducing your taxable income. Got it. The reason that the reason that they allow you to take the money out prior to being taxed, because it lowers your tax rate right now, and gives you a break now with the hopes that when you're older you'll be in a lower tax bracket. All right. Pardon me again. I got to get through my notes, see where I am, and see what I need to cover. All right. So now, when you're in a 401k, your company generally will give you a certain amount of choices. I am going to show you guys a semi-live look at how you look at your 401k. I will do a live portion and I'll do a semi-live. And when I say that, I mean I have some slides. And the reason I'm doing the slides, the reason I'm not showing you the live look is because I don't want to compromise the account that I'm going to be looking at. I won't be covering an IRA today, but when I say IRA, I mean a Roth IRA or a traditional IRA. Individual retirement account is what that means. I won't be covering that today, but these principles can be applied. Some of the principles can be applied to those accounts. I'll be doing that at a later time. All right. Um, I'm getting it's some private jokes in here, but I appreciate the love, yeah, I do. So let's see what we got. Tax considerations. Now, so because these are you're allowing your investments to grow tax free, you can tap your retirement account at age 59 and a half. If you do it prior to that, there's a 10% penalty. Now, your company will provide you with a certain list of things that you can invest that money in. So remember, I told you the $100 and that I put in, and the $80 that they matched me. And by the way, that was per check, right? You should decide for yourself what percentage you can save. Now, if it were me, if I'm getting a raise, if I got a raise, I didn't really take all my raise. And when I say that, if I got a 5 or 6% raise, I'm not about to go out and splurge and live 5 or 6% better. What I would do is take 1% to add to how I'm living, but the other I'm putting toward my savings, right? Where I may have started with a 5% savings rate and then later bumped it up to 10 and then later bumped it up to 15 or something like that. But you want to put money aside and you do it until the point of match. So if your company will match you up to 6%, put all of that in there because it's free money, right? It's part of your compensation package. Any additional money, that's when I would go to an IRA, a Roth IRA to start, right? And then if I tap that one out, I'm going to a traditional as well. But you create buckets of money, and that's going to make she signs laugh. You create buckets of money for yourself. The reason I don't want to continue to put money into a 401k after I've reached the point of match is because you are limited to the offerings that your company has. And so I keep talking about that. So I think I should show you what I mean. I'm going to show you what I mean with that. But let me cover these things before I do that. So again, you can withdraw money before the age of 59 and a half, but there's a penalty. If you do it after 59 and a half, you're great, right? But if you don't start taking distributions from you are required to take distributions at age 72, or at least that was the rule. In January, they changed the age to 73. So if people were just kind of sitting on a bunch of money and they got to 72, this was prior to earlier this year, they would make you take out distributions so you can start pulling your money down, right? The age has changed to 73 as of this past, I forget when they changed the law, but it got enacted in January. And I'll tell you about the other 7 changes. There's 7 changes in total, but the other 6 changes. We got some coming up in January 2024 as well. So now, periodic review. Now, I think I can actually go regular review. Yeah, I'm going to go to showing you how you can look at your 401k or the things that are important. So I need to switch gears I'm going to switch from my set face to just showing you an example. So I need to share this again. Hang on. I need to figure out. Here we go. Present. Slides? Yeah, I have no slides. Okay, from my computer, right there. Pardon me. Y'all talk amongst yourselves. I'm figuring something out right now. Okay, so I want the file is called right here. Close. Talk amongst yourselves. How's everyone doing? I'm almost there. I thought I could just share it this way, but it's another way apparently. Is it here? There it is. Got it. And the one that I just changed would be. I hope this has the updates. Please have the updates. There, got it. Okay. All right. Yes. So now that's the file. You're still seeing me though. Present. Share screen. Share screen. This one. One second. Pardon me, guys. I'm sorry. This. Share. Yay. Okay. So I think I have it. Can you guys, someone let me know if you are now looking at a PowerPoint presentation? And I need to put this in presentation style. Oh, I'm gonna just share from here. So, okay, so I need to know if you guys can. Oh God, hold on. All right, move this. I need comments. Looks great. Okay, so you guys can't see this PowerPoint, correct? Yes, thank you. All right. So there were some changes made. There's 7 of them. I already mentioned one, but I'm probably going to mention it again here. So the number 1 change starts in 2025. Companies are now required to enroll their employees in the 401k plan. So there's some people that are at their job, been at their job for years, and they're not in the 401k. Because they are forcing you to save for your retirement. Companies will now be, some companies, most companies, are required to enroll their employees in the 401k. Now, when they enroll you, they will put you in at a 3% contribution rate. I think that's kind of low, but it is at least starting people somewhere. That's starting in 2025. Now, number 2, this one I don't really like this, but it's a rule. In January 2024, next year in January, employers can match your student loan payment up to $3,000. That's $250 a month. So the reason I think it's great that your company is now giving you an additional $3,000. Now, I know people with $200,000 worth of student loan debt. $3,000 is not going to help them a whole lot. And I think it takes from the pot of you being able to invest. For me, you shouldn't be investing unless you already have savings and you have extra money to do it. And I think this is going to take away from the money that people have to save. But it's one of the benefits that the 401k plan will now offer you. Take advantage of it if it works for you. The third thing that's changing, it's already changed. This happened in January 2023. This is what I mentioned to you earlier, that the RMD age changed from age 72 to age 73, meaning you are now, instead of having to take required distributions from your 401k at age 72, you can go to 73 at this point. All right, so the number 4 change is in 2024, again, it starts in January. The penalty for withdrawals of $1,000, I'm sorry, penalty withdrawals. No, that's what happened. That's wrong. I'm sorry. I know what it is. They will allow you to take out $1,000 per year for an emergency. I don't like this either. No, ma'am, no, sir. And the reason I don't like it is because there are already people that peel off of their 401k. Your 401k is a retirement plan. It's not a savings plan. It's not an emergency fund. It is for your retirement. When people take loans from their 401k, when not just loans, when they take loans, when they take distributions for it. A loan means you're going to pay that money back to yourself. The distribution that you take comes with a penalty, number one, right? Because you remember, you're taking it before age 59 and a half. And the other problem with it is now that's opportunity cost lost. You've just taken money from your retirement that could be growing for you. But what did you do with that money? I paid off some debt. Well, you just took money from your retirement to pay off some consumer debt. Don't do that, right? Or, all right, Johnny broke his leg. Now, come on. That's your retirement you're putting in jeopardy, right? I'm not saying not to take care of your kids or take care of whatever little emergencies that you have, but it is not an emergency fund. You need a separate fund, a separate bucket of money to do those things. So you should be saving first. You should be putting away money for retirement next. And any extra, you should be putting away some more money just because. If you continue, this will allow people to take money from their retirement. That's opportunity cost. So that, say you took $1,000 out next year. That $1,000 could have been invested in Microsoft or Home Depot or something like that, growing your money. But instead, you reducing the amount of money you have to save or saved for retirement. I wouldn't do it, but it's available for you. And by the way, you're still going to pay the penalty. Now, number 5, in January 2023, people 50 and older can save. I'm sorry, this is January. This was 2023. This is when they changed it where you could put in an additional $7,500 as catch-up funds if you're 50 and above. Now, what happens in 2025 is they're going to allow people that are age 60 to 63 to put an additional $10,000 away in catch-up funds. Now, that's in addition to the limit that is currently $22,500. So in 2025, you'll be able to put $32,500 away for your retirement just to be able to catch up to and putting away enough money for your retirement. Because guess what? They ain't going to take care of you when you get over it. Just saying. Now, number 6. In 2027, there will be I'm not really covering this because it's 2027 and I actually think they're going to change it. So there's a savers credit that you can get right now. It is going to change to a savers match. I want you to look that up. It's a lot of verbiage and it's confusing. And honestly, I don't think it's worth talking about right now. So if you want, look up what happens for the savers credit that turns into the savers match in 2027. The 7th thing is in 2025, this is good for part-time workers. Part-time workers, if they worked a certain amount of hours and if they were at their company for 3 years, they could be enrolled in the 401k. That is being changed to a 2-year, them being on the books for 2 years. That gets them into the 401k 2 years sooner. Those are the changes that are coming up for the 401k. Now, I need to stop here because I haven't. No, I don't. I need to go here. I am going to kind of drop this down for a minute because I need to check the comments just to see if there's something I need to speak to. So give me 1 second. Oh, you guys been talking. My first time with TSP, when I worked at the post office, I blew out all of it when I quit to go back to school. Okay, but I know what you're doing now. I'm glad to thank you for letting us know that. We will not do it. No penalty withdrawals. Boom. No, don't let them tax you on. Take no more money. It doesn't make sense. How do you get the brown skin color emoji? Somebody help Kelly, please. All right, what you got? Sustainable Self says, great advice, D. The government benefits from both the penalties and taxes when folks take early distributions. So important to understand their angle. Yep, it's not just to help y'all. All right, good job. All right, you blew your money at first, but you caught back up. Good job. Glad to hear that. I think I may have missed some other things, but hey, Donna. um, oh, what's she saying something about? Can freelancers contribute to a 401k because technically freelancers don't have a company to match? No, they cannot. But what you can do is contribute to a Roth IRA. Currently, please get this right. Yeah. Currently, you can contribute up to $6,500. And if you are older than 50 years old, you can do $7,500. Now, if you tap that amount of money out, then you can move to a traditional IRA, as well as you can move to a regular taxable brokerage account. So yes, please, if you are a freelancer, do something for yourself and put money aside, because if you guys think about stuff like what's going on, all of the, you guys know how much we're in debt? The U.S. is in debt, right? I think it's a 33 trillion, $33 trillion, right? So as we get older, those things got to be paid for. And we're sending, I'm not knocking this and I'm not trying to talk politics. We are sending money to other countries to fight folks. We are sending money to other countries to kill folks. That stuff has to be paid, and unfortunately, your tax dollars are paying for it. We see that they are changing programs. We don't have enough. There are certain people that think you're not entitled to the things that you were promised as if it's a handout. Those are handouts. You actually paid into those programs. And those programs, if they are not invested properly, they're not being, the money's not being made quick enough for the retirement boom that we are having and that we will continue to have. The baby boomers are leaving the workforce, right? Next up are us, me. I'm sorry, Gen Z, Gen Xers. Where did I get Z from? Gen Xers. We're the next group to come out. If enough money is not being paid into the system, how's it going to take care of us in the end? That's for you to figure that out, and it's for you to save for your retirement. So let me go. Are there any other things? Sabongale, thank you for answering what an MRD is. It is a minimum required distribution. That's correct. That's the money that you are required to start taking distributions now at age 73. So I am now going. I think I'm caught up here. Do I recommend a SEP IRA for retirement accounts for freelancers? Yes. Thank you for pointing that out. That is also an option. Somebody please get her the brown skin emojis because we need to be represented here. All right. I think I'm caught up with the questions or things that needed to be addressed. So I need to go back to my presentation here. I don't know. Do I start live here? I'm not going to start live here. And when I say live, I'm not going to start showing you a live Fidelity account. Now, can you guys tell me if you see the PowerPoint again? Yes, thank you. All right, so here. I did this. I'm going to the next one. Yeah. Why are you not moving? Why isn't that moving? What's happening? Do I have to stop share to show this again? Oh God. Okay. I love y'all. Thank y'all. Now you move. Okay. All right. So, what? First of all, I am in. This is a look at the Fidelity platform. I mostly use Fidelity for my investing, my trade. I'm not going to talk about trading, y'all, but I use it for trading as well. So I am. If you have Fidelity, I want you to start to get used to going into your 401k because you need to know what it's doing. And again, I have blocked out certain things here because I don't want to compromise this account. You don't need to know those figures. You need to know how to look at your 401k. So in this 401k, there are one, two. This 401k holds three holdings, and then I'm going to explain to you about Brokerage Link later. Your company will give you choices to make with the money that you've been putting aside, right? So it's not enough for you just to put that money in the 401k. You have to direct that money. Now, there are some people that don't make those decisions themselves. There are companies that hire a third party to help you manage your account. That's fine. But there are some people that self-direct their money, right? I self-direct all of my holdings. Excuse me. And I'm not saying that you have to. You don't have to self-direct. You can have someone else manage it, but you still need to know what you own and why you own it, right? And if it's something you want to remain in. So now I am only showing you this to show you that if you get to the investment performance and research tab, you'll see that I should actually cover these. This tab comes from the performance and research. Once you go there, you'll see that the investment performance and research tab pops up, and it'll show what you are holding, and you can view your performance in that in the funds that you in the 401k where you hold these funds. So in this fund, there's a large cap U.S. stock index fund. There's a small and mid U.S. stock index, and then there's the total U.S. stock index. Now, those are only three things, and I'm going to show you where those come from. The tab that I am looking at under the performance tab is your balance overview. There is an annualized return and there's a cumulative return. So if whatever platform you use, whether it's Fidelity, Vanguard, Schwab, I don't know, any other thing like that. There's some others, but I'm just talking about the big three right now. Go into your 401k and start poking around. You need to look to see what's in there, what's available for you. There's a lot of tools in there. There are tools to teach you about anything going on in your portfolio. There's tools to teach you about investing, how, risk tolerance, asset allocation, everything. It's all there. You just have to access that information and start using it. And also use your HR department. That is what they are for. You call up your HR department and find out what your plan offers you, right? And if there's something else that you can take advantage of. Not only that, you use Fidelity. Call them and get on their nerves. Call them every day. Call them every 2 hours and say, now tell me how much money I got again. Or call them and say, now what is this? Explain this to me. Direct me to whatever I need to be directed to. You call Vanguard. Do the same thing. Call Schwab. But get involved with your own retirement, your own money, and your own investment tools. Okay. Now let me move on to the next slide. Remember, we have the large cap, small, and total, right? That's what's in this retirement fund. Oh, let me cover something else. So of this, There's also Brokerage Link. I'm going to talk about Brokerage Link later. But 77% of this account is in Brokerage Link. 12% is in a large cap fund, and 8% is in the small and mid, and 3% is in the total US stock fund. Stock index. I changed my wording on purpose. I said fund at first, but I meant to say index, and I'm going to show you why. So I'm going to go to the next slide. If this thing will cooperate, why do you keep doing this to me? I swear to God, I'm hitting move to the next slide. It's not moving. All right, there. Okay, so now this, what you're looking at is AT&T's plan. All right, again, I retired from AT&T, but this is the current plan that all current and retirees can put their money in. AT&T provides 24 investment options, right? And of those options, if you see these check marks, those are the three things from the slide earlier. I am staying near a train tracks. I hope that the train is not affecting this too much, but it'll be gone soon. So the check marks indicate that these are the three funds that are being held within my 401k. Those are the things that I wanted it to be invested in, right? But there were 24 options. So nowadays, there's something called a life cycle fund. And you'll hear it referred to as a target date fund. So when people come into a new company now, or, maybe, I think it actually started maybe 6 years ago, where they would, these here, AT&T asset, I'm going to forget the AT&T part, but you see this asset allocation 2060, 2065, 2005, 2010, 2015, all of those are expected retirement dates. And so you'll see a lot of companies put you into those type funds. I hope you guys aren't saying anything because I'm looking at the slide. They'll put you into these types of into those type of funds. Now, the reason they have these life cycle funds, or what a life cycle fund is they will hold things that give you a certain amount of risk, a certain amount of safety, and a certain amount of growth, right? So there will be stocks, there will be bond, and there will be a certain amount of cash within that fund. And they set up that asset allocation within that fund to give you the growth that you need for the time frame that they think you'll need before you retire. Those numbers mean that in this example of 2040, that's your expected retirement date. So they will adjust the things within that fund for someone that age and that will be retiring in 2040 or around 2040. And they they do go every 5 years. So there's the 2030, 2035, 2040, 2045, right? A 2065, where are we? That's weird because we are in 2023 and this is 42 years out. I ain't working 42 years. There's some people that are gonna do it. Now, they might do it because they want to, but I hope that they're not setting those up because people need to. All right, now, so you'll see these funds. They'll show you what asset class they're in. So that large capitalization. So those are going to be companies like Apple, Microsoft, NVIDIA, things like that, right? And I'm going to show you all this later. I'm just telling you what large capitalization means. It is a stock investment fund, is a large capitalization fund. This is nothing. All right, so what this slide also shows you is the return that this fund has provided over the course of 1 year. So it's doing 21.62%. That's great. for 1 year. Over 3 years, it's averaged 10.17%. Still great. Over 5 years, 9.95. That's basically 10%. That's fine. Now, what's important to know about that, again, is that the stock market generally returns a 10% annual gain. If you are doing 21.62%, you're beating the market. If you're doing 10.17, you're beating the market, right? 9.95, you're just kind of making it, but that's okay. That's fine. What is also important to know, this is why you need to look at your 401k. In this, which means I need to do some changes. Okay, small and mid cap. Over the course of a year, it's beat the market at 14.48%. But over the course of 3 years, it's underperforming the market at only 4.73%. And over a course of 5 years, it's still underperforming the market at 4.56. You want to make sure that your money is working for you as hard as it possibly can for you, because you don't want to get to be close to retirement and find out your money has not been making enough money to give you a for you to be able to retire to begin with, or for you to be able to retire well. So if you go in here and you look to see the options that you have and see if there's something performing better. That's why you want to go and look at your accounts just to see how they're performing, if they're doing what you want them to do, and if they're making you the gains that you want to be able to make, and if there's other options that you may be able to consider. I'm gonna move this for a second. I gotta find a better way to do this, and just check to see if there's anything happening that I might need to speak to. Well, I'm not gonna get into all of this, but you do realize that our money is not backed by anything. It's just paper. We can print it. We can just keep printing it, which means we're devaluing the dollar every time we print. We remember there's something called the gold standard. There's nothing backing our money. And if you're interested, look up BRIC, BRIC. Oh God, it is Brazil, Russia. Who's the I? Is it India? And the C. Anyway, look up the BRIC nations. They are trying to come up with currency that does not require the dollar. They're trying to go around us, and they're going to try and take the U. Look into it. I'm not going into that, but our dollar is not as great as we want it to be made out, as they make it seem. Did my mouse die? Oh, okay. You see it. Great. Okay. Okay, good. You like the Fidelity platform? We have to chat about using Fidelity for trading. Now, wait a minute now. Take it easy. New Monet. Who's this? Hey, wait, I got to put you off so I can read the thing. Oh. Oh, no. We got to talk about that right now. Now, hold on. I can't actually. Oh, I can see it now. Hi, New Monet. Thank you for joining us. I want to speak to what you're saying. And don't worry about being late. Thank you for showing up and checking in anyway. Your company stopped matching, but you still contributed. I have very little at age 49 after 20 years. So if your company is not matching, don't put your money in that fund, right? There's no reason to. You're not getting any benefit out of it. Now, let me qualify that. If you're in a 403B, generally the funds that are within that are backed, have a lot of insurance products. Insurance is not an investment vehicle. And so insurance products, what they do is they'll guarantee you a 5 or a 6% gain. Well, all right, I'm gonna be nice. I'm gonna say a 7, 8, 9% gain. There are funds that you can do far better than that, right? So again, you're limited to what your company is offering you. I wouldn't put my money into that plan. I would put my money into a Roth IRA. That way I can choose the things that I want my money invested in, right? And you're probably, with the offerings that you can, you're open to everything in a Roth IRA or a traditional IRA, right? And if you're open to everything, then the list that I showed you, where you're looking at something gaining 10% and 20% and 32%, you can choose those things where your money can be making money for you versus putting it in a company plan where they're, one, not matching you, and two, have limited the things that you can invest in. And three, the things that you can invest in, because it's a 403B, probably are backed by insurance products. They're already going to underperform the market. And by the way, I'm not a financial advisor. I am not a financial planner. I am someone that has done well with their money. I am a former AT&T worker. I've just done a lot of studying and taught myself how to do this. This is not advice, but I am telling you, if it were me and my company stopped matching me, that's cool. I appreciate y'all, but I'm going over here so I can self-direct my money. But that's what I would do. If you want to talk later, book some time with me. Go to my Facebook, not Facebook. Go to my YouTube channel and look in the about page, or look, there's somewhere on there. It'll show you where you can contact me, or you can send me an email to browngirlsinvest2@gmail.com, and we'll get you, if you want, we can set some time up to talk about some options for you. All right. Sorry that happened, by the way. Yep, that's absolutely correct. Fidelity has free webinars on investing, trading, everything. Schwab is extremely helpful as well. Thank you for that. There's always going to be ups and downs in the market. I don't know the time frame that you are speaking of, but for last year, the market went down, right? And the market has been down this year, but we've come down to a point where we're now starting to stair step back up. If you ever, what you should do, go to Yahoo Finance and look up SPX or SPY. That's the whole market for the most part, right? And what that shows you, and by the way, when you do that, put that on a 20-year chart or a 30-year chart. And what you'll see, you're gonna see ups and downs and ups and downs and ups and downs. But what you'll notice is that the stock market always goes up. There'll be a pullback, but the stock market is going up all the time. You know, through pandemics, through 9/11, through wars, all of that. The stock market will pull back, but it will stair step its way back up. That's what it's always done. That's what it will continue to do. So even though you've seen some aggressive pullbacks, you're in it for the long term. You're not doing the short term, right? Your money will continue to go up. People, the best investors are the ones that do not touch their funds, that do not touch their accounts. I promise you. Dead people, this is no lie, you can look this up. Dead people's portfolios actually outpace people that are constantly moving it around. And that's because they remain in the market. If you are retiring when things are going up, you can buy less of those things. But when they pull back, you can buy more shares because they're now cheaper, right? And so the constant movement of it going up will put you in step, right? Don't worry about it. Do me a favor. Do yourself a favor. I'm fine. Do yourself a favor and send me an email, okay? Or go and book some time with me. That's true. Yes. Okay. Is my 401k account separate from my trading account? Absolutely. I'm not putting my retirement account money on the line. What she's talking about is I actually I day trade, I swing trade, and I long term trade stock options. I don't. I mean, I don't trade shares because why? I mean, I don't trade shares because I can get if I wanted to go buy 100 shares. How much is Microsoft? What do I know the price of? Nvidia. So I think Nvidia's trading at trading at about $475. If I wanted to trade 100 shares of that, I have to spend $47,000 to trade Nvidia. I don't want to spend that. I don't want to put that much money at risk. So I trade stock options. It's a much lower barrier cost to entry. I'm not telling you to do that. It's very risky. It requires a lot of education, and you guys don't have it yet. I don't think so. Please don't go trying to do that until you educate yourself. Yes, you did, and I think I know when that happened. I'm glad you did, and you've made really great gains. Life cycle funds are going to have bonds, and they're not going to be as aggressive as a growth fund. Now, I'm not telling everyone to go be aggressive about anything. People that are older, that are closer to retirement, should actually pull back, take the foot off the gas a little bit when considering investing, because you're going to need your money sooner rather than later. So you got to be a little more careful, is what I'm saying. Thank you, Tracy. Yes, guys, please put a. I'm new to this. Tracy been in the game for a minute. Put a Q for question before your question so I can identify those. The funding is from the retirement account. When you say, okay, I think what you're talking about is the funds that I showed you earlier, the large cap funds. Remember, they're taking, I'm speaking in, if I were an employee, they would be taking money out of my paycheck and putting it into a pot of money, into a money market, to be honest. And then what you do as the employee is you tell them what things you want to buy, right? So in the case that I showed you earlier, I said I wanted you to buy me a large cap US stock fund, the total US stock fund, and put me a smaller percentage in the small and mid cap fund. So that is what the dollars that your money and the company match are buying, the funds that you told them to buy. That's what it's funding. Investing in that. Yeah, that's correct. You ready to be my assistant? I might need one. I only got, this is my first live. Come on, give me a minute. But yeah, if you want to help me, help me. I appreciate it. Yes, that's correct. Brick wants to weaken the US dollar. That is correct. Michael, thank you very much. So it is Brazil, Russia, India, China, and South Africa. Now, that's the name of BRICS, but there are more countries that have joined, more countries, plural, that have joined them. Isn't she also paying for them to manage that 403b? Hey, Yvette. Hey, you guys, listen. Yvette, like she was in technology, I think, but now she's a plant girl. She's been a plant girl. Y'all go check her channel out. She's got stuff that I can't even pronounce. My mother would love her, right? So check her out. She teaches people how to. In fact, you tell them what you do. I know I can't do it. I think it's lovely, but I can't do it. I'll kill a plant. Not on purpose, but it happens. Tracy is also a plant girl. Drop the links to book time with you. Y'all asking a lot. 1 minute. And thank you. I should do that. Let me do that. I gotta figure out how to do it though. I'll do it later. Give me a minute. If somebody could, can you go to my page and find the Calendly link and drop it in here for me? I would really appreciate it. All right. Thank you. Starting to follow this channel after you on. Oh yeah, Stephanie Perry. Yes, she's great. She actually got me started, and she got a couple of other people here started. Let's see. Yes, I'm glad you're learning. Continue to learn. Do more learning than you do trading. And don't use real money. Yes, trade. I don't know what platform you're using. I mostly use Thinkorswim, but trade your paper accounts, right? Until you get good enough and get consistency enough where you are making money and you're not, don't put a lot of money at risk either, whether it's paper or whether it's real money. Good luck to you, all right? Mm-hmm. Kelly loves that. So are you saying don't invest from? No, I'm not saying that at all. No, I'm not saying that at all. I am saying yes, you invest from your retirement account. I think I hope that what you're speaking about is when I told her, I didn't tell her. I said, if it were me and my company stopped matching my contributions, I would move my money to an account where I could direct my money and have more options to be able to invest with a better chance of getting a better gain. That's what I was saying. If you have a 401k that is more regulated than a 403b, I will continue to invest within that account, especially if your company is matching your contribution. Hope you understood that. Okay, all right, there it is. She a plant mama. Um, Evelyn and Felicia are also plant mamas. I think she tries to be, but she might be a plant auntie. Okay, Yvette, go. Good for you. Learn more than you're. Same way. Listen more than you talk. So learn more than you trade. Okay. Um, Thank you, Kelly. I appreciate that. Thank you very much. Okay, so I think I'm caught up. No, I'm not. Add the links into the description at the end. Yes, thank you, Tracy. I will add those links for you guys to put some time in with me in the description of this video once we end it here. I don't know what that means, but thank you. And thank you for the compliment. I appreciate that. Tracy, Tracy just, let me start. Well, I'm going to tell her business because she already told her business. Tracy Collins has a YouTube channel. Go check her out. In one of her last videos, she let folks know that she just moved out of the country, by the way. It's a thing, y'all. And she just went and bought some new plants for her very beautiful home. Yes, Yvette, please drop yours. And all of y'all, drop y'all links. I don't care. It's all love up in here. Thank you, Kelly. I appreciate it. I'll get it in there later. Okay, now I need to go back over to here. And so I am imagining you guys can still see the PowerPoint. What kind of time am I looking at? I'm gonna try and get through this. All right, so let me go to the next slide. You remember on this slide, it tells us we have 24 options, but these are not 24. So there's a second page, right? And here's the rest of those options. Now, I am bringing this up because if you guys, I want you to check your accounts, check your plans and see if Brokerage Link is an option for you. Oh, I don't think this is going to be an option for Monet, but check yours. If you have Brokerage Link, that will allow you to take a certain amount of your already built funds within your portfolio and invest and self-direct it into anything you want. This is how I actually did better for myself. Now, I told you I worked for AT&T for 30 years. AT&T is not the company that it used to be at all. My stock would go up while I was at the company, but it has tanked for the most part. I think if I'm not mistaken, it is a $15 stock at this point. If I had left my money invested into mostly AT&T stock, I wouldn't have been able to retire, right? So because I was allowed to put money into Brokerage Link, I could put money into companies that were growing or into funds that were growing. Companies like Apple and Microsoft and Home Depot, Johnson and Johnson. These are all my favorites. Procter and Gamble, right? Into Tesla, companies like that. That's what Brokerage Link allows you to do. It allows you to put money into not just other individual companies, but better performing funds. I only have an option of 23 options in this AT&T plan. Brokerage Link is the 24th option to give me access to a ton of other things. So see if that's an option within your plan. Go to the next slide. Options available. Why did I do that? I know why. So again, the annual stock market rate of return is 10%. So you see, and by the way, this is the 1 year column, this is the 3 year, this is the 5 year. So over 1 year, there's some things performing at 17%, 16.99. So you want to make sure that the things you have your money in are performing as best they possibly can. That means they're making more money for you and putting you in a better position to be able to retire early. I retired early at age 49, or retire well whenever you do decide to retire. Okay, so this slide, I want to highlight the fees that are involved in you in the plans that you choose. So there are expense ratios. That's what you'll see. That's a fee. What that is, it is the fee to manage that fund. So let's see. Can I do it here? Yes. Earlier I said fund, and I made sure that I corrected myself. I need to go back. I don't want to keep you guys here. I'm going to try and get through the rest of the slides. I want you to understand a couple things. One, if you are investing in a fund, it's usually a mutual fund. Mutual funds have a mutual fund manager. That manager needs to be paid, which will increase the maintenance the expense ratio or the maintenance fees on that fund. That will reduce your fund's performance. So you may have, this is the wrong slide to do this on, but you may have a U.S. stock fund and a U.S. stock fund index and a U.S. stock fund. That fund has a manager. This index is the companies within this are picked by a computer. So it costs less to manage this fund. This fund will perform better because it has to pay out less fees. I'm trying to go fast now because I know I've gotten long here and I don't want to hold people. Here's the expense ratio. An expense ratio of 0.01 is very, very low. I would say expense ratios up to a 0.06, those are low. But when you get to paying double digits like this, 0.38, you don't want to be paying expense ratios like this. So those, I would just kind of move those to the side and look for something that is performing higher with less fees. All right, let's go to the next slide. What do we got here? So if I had clicked on one of those 24 options, one of them was the large cap U.S. stock index fund, right? And it'll give you information that shows you the 1 year performance, 3 year, 5 year, 10 year performance. These are the things you need to be looking at to see how your funds are performing within your 401k and in your portfolio. Okay, I'm going to stop the share here and see what else I got going. Hey, Shana, how are you? Thank you for joining. I appreciate you. I'm struggling with the idea. Okay, I don't know nothing about no plants. Y'all do that yourself. While you guys are talking about that, I am going to go to, I don't think I'm going to do that. I went very long, and I appreciate you. I don't know, did I close this out well enough? I don't think I've closed this out. So what I will say is that get involved with your 401k. Get involved with your own retirement, right? If you do not have an emergency fund, build one so that you're not pulling money off of your retirement account. Go into your 401k, see if you are in funds that are performing well, right? Or if there are options that you can make your money work harder for you. Go in there and check to see the expense ratios that you are paying. If there is a fund that is performing around the same thing, but it has a smaller expense ratio, consider switching it to the one that has the smaller expense ratio. I said consider it. Again, this is not advice, but it's something for you to look into and do your own due diligence. Get involved with your money. I hope this was helpful. I hope you enjoyed this. I hope you learned something. Do me a favor, like and subscribe to my channel, share the information, leave me some comments. Let me know what's going on with you. Maybe there's something we can talk about within comments that will help you, or book some time with me so that we can make sure you are on track to being able to retire well, moving on to financial freedom, whatever the plans that you have for your life. Thank you so much for joining. Thank you guys for being kind to me, and thank you for being patient. You guys have a great one. Thank you. Bye-bye. All right, now I got to figure out how to stop this. Talk to you later.